Good morning, traders. Thanks for joining me. Sorry about the late start here today. Oop, hang on. Sorry about the late start today. Just having some issues with my charts. Thank you for joining me. It's 8:04 a.m. Chicago time. This is episode number 2405. It is Thursday, the 2nd of February, 2023. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick sound check. Okay, sounds good. Let's dive in. Convergent trading pre-market summary sheet this morning. Risk on, really solid risk on this morning. Europe is up 2%. I'm sure you heard the ECB came out this morning and announced that they would be increasing rates by 50 basis points to 3% from 2.5%, as expected. There are comments right now, so caution if you're trading the euro or European products. There's a lot of news flow this morning following the FOMC decision yesterday. So the market's very edgy this morning. So that's where we are. Risk on. NASDAQ just ripping. NASDAQ, the reason it's ripping is this. We're looking at Meta up 20%, Google up 5.5% at some point in sympathy, Amazon up 4%, Microsoft picking up. Microsoft is going to be including GPT as part of its Teams premium service. Apple's up 2%. Tesla's up 3.76%. These are all NASDAQ issues, and they're very likely to continue to put, kind of a wind in the sail of bulls today. This morning we had a bunch of earnings. I'm not going to go through all of them. There's just too much to cover. We do have some big ones. So this morning we had Shell, $101 billion. I'm going to say that again, $101 billion in revenue, expected at 66.93, just blew the doors off of their standard revenue numbers. It's just gigantic. 100 billion. This is why I believe the Biden administration and kind of the left-leaning politicians are looking to kind of dip into their pockets based on the comments that have been made. Shell kind of makes a case for them this morning. Cardinal Health also came out. Sony came out and beat by 35%. ConocoPhillips a little bit off. Merck beat by 5%. Bristol Myers Squibb 5%. And then after the close today, we have the big ones, the big mamas. Amazon expected at 17 cents with revenue of 145 billion. Apple expected at $1.94 with revenues of 121 billion. And Alphabet, Google coming out of 75 plus billion each, and $1.20 and $1.18. Those are the big ones. Ford reports after the close today. That might push the automotive sector, and then Qualcomm as well reporting along with Starbucks. So there's just a lot going on today. We had the ECB this morning. We had the FOMC yesterday, beginning of month, and then these huge earnings and the super mega caps after the close. There's just a lot going on here. The FOMC press conference yesterday, really hawkish release, right? We did increase by 25 basis points. We're no longer increasing by 50 or 75 basis points. So already we're kind of topping out. So the market likes that. The market anticipated, priced that in, and got what they wanted. But it was the dovish conference that pushed the market over the edge. The fact that when asked about whether Jay Powell was concerned about the loosening monetary conditions in the market, the part of the market that he doesn't control, which is a huge part, that shows up in Eurodollars and things like that are outside of the Fed's control. He was asked if they are concerned about that, and his answer is, eh. Whereas before he would have hammered on that and said these are unreasonable trades, or they're taking excessive risk in this environment, or something to talk these guys off the ledge. Yesterday he was just like, yeah, maybe we'll keep watching. So the market reads that as, hey, the Fed is backing off. They're clearly backing off. So we ripped up from the key price that you need to remember from yesterday. The most important price you need to remember from yesterday is 40.90. 40.90. Emboss that into your forehead and have a mirror in front of you. 40.90. And then the key number we wanted to see the market get to on the extreme is 41.77, and we're at 76.25 overnight. So we didn't quite hit it yesterday. We'll go over that in a minute. BOE and ECB decisions and press conferences today. Meta posts earnings surge and announces a huge buyback. What was it, like $40 billion or $41 billion? They're also tightening their expense guidance. And on their call, they're basically saying that they're going to just tighten up on expenses and run lean and mean. And the market really loved that, so they're up 20%. Monetary tightening coming to an end is the overarching theme, and this really helps boost the market higher. Still, the 4,100, 4,150 zone, that zone is an iffy zone for the S&P 500. From a macro perspective, we're not macro traders, but just keep that in mind. This is a zone that we're in now is more of a zone of buying pullbacks than buying breakouts up here. It seems by many, many measures that we're extended. The S&P so far, multi-distribution profile is balanced for most of the morning, but now it's in a multi-distribution profile, breaking out to the high side, taking out the 4160, 62 high, and trading 310,000 contracts. So pretty heavy trading. We're approaching the 330, which is the extreme of normal. The inventory is 100% long. We never tagged the prior settle, which is at 4132.25 in the S&P. We're up 40 points here. The rotations have definitely increased. So when I run the rotation stats this weekend, I'm expecting those to tick up. And we have 39.5 points of range. So expecting today, the market is out of balance. So expecting today to generate quite a few opportunities, not only with the news flow that we have, but also the fact is we have pushed out of balance into a key test area at 41.77. And I'm expecting the market to respond or to do something. So this was yesterday's Trader Bite. You can watch it anytime you want by going to youtube.com/Futures Trader 71, I think. I don't remember. But search for Futures Trader 71 on YouTube and you'll find this. This is from yesterday. And I talked about, everything ahead of the FOMC is probably going to be noisy and choppy and tough to trade. But after, we're going to be immediately looking for 4140 as a key test area. But the big one's 4177. I wrote it in here just so that we can refer to it today. That is, if we're bullish, we're looking for 4177. If we're bearish yesterday, the first stumbling block is likely to be 4030, which was very tight. 4030. Very tight for FOMC. The key number we would look for on the downside is 39.92 to bring us back into balance. So here we are. We've pushed against this key resistance area up above. We are right here, right now. So I'm expecting the market to respond to the downside and become responsive this morning initially. It is a high volume node and it's likely to attract price. There's likely to be a fight up here, but the market's quite extended. We didn't shift the point of control higher yesterday from where we are. So if we look at yesterday's action, this is where we are, where we were all day. So here's everything up to the FOMC. The FOMC, in fact, is right there. This is the entire morning. This is the beauty of PNF or Renko charts or non-time-based charts. They give you a very clear view of when the action has picked up. So this is the entire morning from 8:30 Central to 1 Central. I'm in Chicago, so it's Central Time. And then this is everything after the FOMC and RTH in the RTH session. And it's represented by this blue profile to the left. So what you're seeing here is just the enormous amount of volatility that came in afterwards, generating a lot of bars based on a 1 tick by 8 point and figure. So every time it reverses 8 ticks or more, it creates a new bar. And so right there, you see that there's quite a bit of volatility, but also what we did is we pushed to this kind of this 90 area. This is the 90, and we retested the 90. Look at that. After the FOMC comes in here, we retested the 90 and actually pulled back. So we pushed, pulled, started to move to the downside. We went to 40.50, the mid-century figure, right? The mid-century is always kind of in the way, so to speak. We went to the mid-century figure. This is a mid-century figure right here. This break higher and fall below is a mid-century test on high volatility. Then we went to the mid-century. Then we came right back in, tested up to the 90, pulled back to the zipper. Very, very tight trade there. Very frustrating trade. I would do a great service for everybody to make a book about how not to trade the FOMC based on how I looked at how I performed yesterday in the FOMC. Just to complete and utter garbage, I would have to admit. It's just one of those days where my mind had the right plan, but my click finger did not. I was just not in it. By the time the FOMC came out, I'd been in meetings. I've been in several meetings. I was working on tax stuff, and it was just, I was just burnt out, mentally burnt out. But I saw this trade and just absolutely froze on it, did not execute. It does not make me a non-professional for doing that. It's just I was not informed, and this is where it's really important on big announcements like this, if you plan to trade them, to go and do something good for your body, like go for a walk, go do yoga, go take a nap. You know, the minimums to go for a walk somewhere or get on a treadmill or something, or go to the gym, like just come back physically fit, because mentally fit is not fit enough. And boom, it breaks through the 90, comes back, and the pullback from the 90 was so poor. Just did not see it pull back enough to jump on later. Another opportunity presents itself right here. So we have an impulse, pullback, continuation, pullback to the impulse high. This was another opportunity right here, and it squeezes right into the 41.36 or so, and then it just consolidates and then finally blasts through the 50. The 41.77 was key, as you saw in the prior from yesterday's video, and we just hit it. It took a while for us to hit it. This, to me, is somewhat exhausted. We did have good price action with good delta yesterday. It was tough to be short yesterday. You got maybe a small sniff of favorable excursion before it turned around and just ripped your head off. To me, this was very, very bullish. And, you know, we've been one-time framing up, and we talked about the bullish case yesterday. I talked about the bullish case in crude also to 80.50, and it just could not get that done. We'll look at that in a minute. And then this morning, we sat here in this balanced distribution. We had taken out the prior day's high by a tick or two by the time I'd come in right here, but we were pretty much balanced, and then we just ripped up on the ECB announcement. Right after the ECB announcement, we started to drift up, and now we see a pretty decent amount of collisions up top. You can see those blue and red big dots right against the 77. So it starts down here at the 75, right? And now it's rotating down. It's come back down to 67 or so. And we expect it to pause up here against the 77 level. The 77 level, again, is pretty key, and it's operating the way we would expect. So the overall, the big picture is that we had a very bullish close the day before. We opened at the upper end of the range. 40.30 is the governing price. We went down yesterday to 40.50. We bounced, and then we broke out. We have these single prints right down here at 40.90, and that becomes the key price to test. We have weak structure. We have weak structure from 40.90 to yesterday's high. So as soon as we start to penetrate this upper structure and start to trade that flagpole, the string of singles going up, it is really open all the way down to 40.90. It creates a pretty decent opportunity to get short. I'm not condoning the short, but pretty good opportunity for short once we get back into the range. So what are we doing this morning? What are we looking at this morning? So here it is. You can see that, very nice push up, but the point of control remained at the bottom of the range. We did have pretty good two-way fight here at 41.30 or so, and we ended up settling in this area. So we fought in here. We had a pullback push. We consolidated. Then we finally went to the high, came back and settled in the 41.30. We are out of range of yesterday this morning. So this morning is the classic setup, which is how does it respond this morning once we open? This is the key. So I'm going to be watching very carefully at the open, which is in about 8 minutes. I'm going to be watching to see, do buyers come in and actually have an initiative push higher? Is there more fuel to push this thing higher and go in that direction? Or is the 41.77 putting a lid on it, and we have a pretty strong responsive push down? If we have a responsive push down, and I need to see it, given that I'm trading against yesterday's very strong trend, I need to see it fail, and then I'm going to be looking for the pullback for a gap to settle trade. If we are not able to pull back and close that gap, even if it's internally, in other words, it cannot close, it's probably going to close the gap zone, but if it doesn't close the internal gap or the settlement gap, then it's just about getting long, and the next area up is 41.90. 41.90 is a composite point of control in this area, 41.90 and a quarter, and that becomes the next key target. So we'll look for pullbacks into 41.60 or so, and then get long to push to 41.90. So it's up to the market this morning. I'm not going to wait too long for the long, but I'm going to wait for confirmation on the short. So I'll take price risk for more information in that situation to see if we're going to come back and recheck the prior settlement. Yesterday was a high volume trend day up, so the rules are a little bit different than what we would have for balance. Real quick, I want to talk about crude. Crude, really surprising. Crude went and took out the prior day's high by one tick, and it performed what we call a one tick failed auction. It opened, fought all the way up to the prior session high, took out the high by one tick, saw that there was no interest to lift, because this should have been a reversal. This should have been a reversal in the one-time framing. We would expect it to explode upwards to the target of that I talked about of 80 and a quarter up here. This is where I expected it to go, and it just wasn't able to do that. Sellers came right in and crossed the entire range. This is really, really bearish for crude. Crude is very likely, since it pushed through the 77 down here, the 77, this big important line of the sand, crude is very likely to, on an attempt to 77, set up a short for continuation lower. That's what I'm looking for. Crude is very likely to move back into the 75 handle from here. Yesterday was a key day for crude. It had an opportunity to reverse the trend down and took it out by a tick and absolutely failed. And so we expect it lower. Anyway, a lot to cover. We have 5 minutes to the open. We've been talking for 20 minutes. I hope you gained something today. I hope you stayed out of trouble yesterday. I did not. Good luck, and I'll catch you tomorrow morning. Take care.